Some locations.
Oh,
You guys are doing it right.
we're good.
You good? Great, cool. All right. Hi, everyone. Good morning. I'm Grace Arnold. I'm the Commissioner of the Minnesota Department of Commerce. I'm joined today by Libby Caulum, who's the CEO of MNsure, and Gary Wertish, who's the President of the Minnesota Commerce Union. We're here today at a pivotal public awareness moment as Minnesotans prepare for fall open enrollment for health insurance. Health insurance rates for 2026 are going up, and the numbers are alarming. Minnesotans covered through the individual market are seeing an average rate increase of 21.5%, and those in the small group are facing an average of 14.2% increase. Middle-class Minnesotans are those that will be hit the hardest by these increases. Those most impacted are individuals and small group and the individual and small group markets are farmers, they're small business owners, and they're early retirees. We anticipate an increase, but what we're seeing is we had anticipated an increase, but what we're seeing is a real gut punch. This goes beyond the numbers. These hikes push real people to make impossible choices, pay for health insurance or rent groceries. Federal policy changes are making a bad situation worse. Recent and are creating chaos and uncertainty, not just in these markets, but beyond. Insurance companies are pricing in that risk, and they're assuming that more people will lose coverage, especially younger, healthier Minnesotans, and that will leave behind an older and sicker risk pool, which drive costs up even further. In Minnesota, we acted quickly to protect Minnesota families and businesses, and that made a big difference. We extended a reinsurance program that offset high claims cost to enrollees and stabilized premiums in the individual market. And as steep as the increases that we're talking about today are, without reinsurance, they would have soared to nearly 70%. But make no mistake, reinsurance is only part of the solution. It's Minnesota taxpayers that are stepping in to cover for the gap left by federal policies. We need Washington to step up and do its part to support Minnesota families and businesses by restoring the enhanced premium tax credits that made coverage more affordable for thousands, including farmers, early retirees, and small business owners. We need to protect and expand Medicaid, not slash it. And we need to remove unnecessary fees and red tape that are making it harder for those to get and keep health insurance. Minnesotans shouldn't have to choose between their health insurance and their wallet. They need a federal government that's working with us, not against us, to make healthcare more affordable, stable, and secure. With that, I'll turn it over to Libby. Thank you.
Thanks, Commissioner. Good morning. I'm Libby Caulum, CEO of MNsure, Minnesota's official health insurance marketplace. Each year, MNsure helps hundreds of thousands of Minnesotans apply and enroll in coverage. We serve individuals and families from across the state at all income levels and from all backgrounds. We help farmers, entrepreneurs, and small business owners, gig workers, contract workers, and other Minnesotans who just don't have affordable health insurance options through an employer. With open enrollment just 1 month away, we're here today to address some of the concerns and questions Minnesotans may have about their health insurance. As Commissioner Arnold outlined, Minnesotans on the individual market could feel the pinch from 2 different directions. Rates are higher this year, and extra savings may be going away. The enhanced premium tax credits that help lower healthcare costs are now the center of the federal government funding debate. These tax credits have a proven track record of success in Minnesota. They have increased affordability for nearly 90,000 of our enrollees and have helped more Minnesotans than ever before get health insurance coverage. Congress still has the opportunity to extend or make them permanent, but they are scheduled to expire at the end of 2025, and time is running. Plans and premiums can change every year, but this year we may be in store for bigger changes. And because of that, this open enrollment will be more important than ever before for Minnesotans to take the time to come and shop and consider all of their options. If you've been enrolled in the same plan for many years, don't just hit repeat. There may be a better fit for your family's needs and budget. Even if Congress does roll back those extra savings, many Minnesotans will still be able to access federal financial help through MNsure. On average, MNsure estimates eligible households will save about $600 per month on their health insurance premiums in 2026. I'd like to walk you through just a couple of examples of real life folks across Minnesota. A 30-year-old in Marshall earning $34,000 per year can cut their monthly premium on a bronze plan in half from about $448 to $216 per month after tax credits. A couple in their early 60s in Detroit Lakes with an annual income of $63,000 can enroll in a gold plan and save $1,500 per month. That's over $18,000 annually with tax credits. A family of 4 in Dakota County with a combined income of $105,000 per year can save over $500 a month. That's about $7,000 annually on their silver plan with tax credits. Today, more Minnesotans are insured than ever before, and we want to keep that momentum going. I want to encourage all Minnesotans to make sure you're covered for next year by making a plan to enroll. Check on your current plan. Does it still meet your needs? Schedule an appointment and get free help with a trusted MNsure expert who can help you compare all of your options. Make a plan for how you're going to sign up for coverage starting on November 1st. And check in with your loved ones and your neighbors. Do they have health insurance? Are they covered? Health insurance is important, and making sure our community members stay covered is one of the ways we can care for each other. I'm going to turn over to Gary Wertish.
Thank you. My name is Gary Wertish. I'm president of the Minnesota Farmers Union, a grassroots general farm organization that has worked to promote the interests of family farmers in rural communities since our founding in 1918. I was asked to share some of what these rate increases will mean for ownership and family farmers more broadly. I'll start with a short answer. It's going to hurt them. It's going to make life harder. It's going to force tough, unnecessary decisions. It's going to add to the significant financial pressure already facing many of our members going into harvest. Healthcare has been a significant challenge for membership farmers and small business owners and those without off-farm employment purchase health insurance on the individual market, where they too often face high health costs and limited options. Changes on the federal level, and in particular, failure to extend the enhanced tax credits only make this worse. Earlier this week, I met with members, and each had their own story about healthcare and what these increased rates would mean for them. For one in Swift County, he was able to welcome his 2 daughters into the farming operation, and long-term goal for them to start transitioning their operation to the next generation. For the daughters, that meant leaving their jobs in town where they had health care insurance, and the cost of health coverage was a chief concern for them. These steep increases, coupled with the tight commodity markets, could be the difference between that canceling out for them this coming year. Another young member from Rice County shared how she maintains an off-farm job for health insurance, and her husband doesn't. They practice farm safety, as everyone should, but what a terrifying decision to make. They're one accident away from risking the farm they've worked so hard to build. Still another survived cancer, and thank goodness her farm income was low enough when she was diagnosed that she was covered by the Minnesota Care Program at that time. She's now in the individual market, but isn't sure if she'll be able to afford that coverage the coming year, and she's praying that she doesn't get sick again. These stories aren't unique. So many farm families struggle to afford their health care. And while they're focused on the harvest and markets, these rate increases will come as an unwelcome surprise. We were just in Washington and we highlighted some of the national data that illustrated the stress facing too many right now. Farm bankruptcies are up 95%. Since 2022, corn prices are down 50% and soybean prices are down 40%. And while the prices are down, farm input costs are increasing up 50% over the past decade. In Minnesota in 2024, we had the lowest net farm income since the mid-1990s. And that was before the administration renewed a trade war devastating our export markets. You know, these rate increases couldn't come at a worse time for farmers. You know, the farm mediation claims are put into the farm, asking for farm mediation or we're not even through the full year in 2025, but it's already higher numbers than we had both years in 2023 and 24 combined. You know, farmers, these rate increases are, even a farmer's a terrible choice. They're going to be faced with the choice of buying health insurance or making their loan payment to the bank to avoid foreclosure. And in some cases, maybe even being able to afford to put food on their table. I don't think that's a choice. That's not a good choice for anybody. It's hard to see a silver lining, but if there is one, Congress can still take action on the health care. They need to extend the enhanced tax credits and help ward off the financial cliff facing down too many families. And they need to do it in a short order, get the government back up and running. The last thing we need for everybody, especially farmers and pretty much everybody out there that's depends on healthcare. We don't need more uncertainty. We have enough of that coming right now. Thank you.
All right, and we can take any questions.
Commissioner Arnold, can you talk a little bit about, I think you said something to the effect of like restoring the tax credits, the ACA tax credits? Aren't they in place until the end of the year, like through December?
So there are two tax credits.
Okay.
Tax credits that existed from the beginning of the ACA, and then we've been calling the enhanced tax credits. The enhanced tax credits expire at the end of this year.
That's from the
made-
2021.
Yeah, so that's made, and Libby can speak to this, health insurance, it's helped drive down our uninsured rate. It's made health insurance affordable for about 90,000, more affordable for about 90,000 Minnesotans. So there are about 90,000 folks who are receiving those. There are additional tax credits that have been in place since for the duration. People may still be eligible for those, and we want people to know about that, and we want people to be scared from shopping for coverage this year.
So when you talk about when you talk about I think the heart of the Democrats, opposition to the CR was they wanted the extension of those enhanced tax credits. You're saying people are enrolling now and those are still in place. You're saying that they just won't apply to them if they expire at the end of the year.
So open enrollment isn't this year for next year's coverage. Coverage goes January 1st to December 31st.
So that's where
Yeah.
you
You shop
the
now,
rules.
or, yeah.
Right,
So
because they
won't be
expire.
this next year.
Okay, that's what I wanted to clarify.
Yeah, and Libby, I don't know if you want to add anything.
No, I would just double down on that clarification. So the tax credits, the enhanced tax credits are in place through 2025. MNsure's open enrollment period starts on November 1st. The folks who will be shopping for coverage for 2026, which begins on January 1st, their coverage would start on January 1st. They, assuming Congress does nothing, they will see, those folks who lose eligibility will see no additional help, or that when they go to shop, they won't get that enhanced tax credit. And so they'll be paying full cost for their premiums starting January 1st, unless Congress chooses to extend those tax credits into 2026.
So when we're talking about the 21% increase, average rate increase, we're talking about they'll start feeling that as soon as the new plan kicks in January.
Yeah, so there are two things. So these are the average rates. So think about it like kind of like MSRP of your car. Like there is the amount of the rate, and then it gets bought down by the federal government through a tax credit. some people will get tax credits, these additional ones won't be there. So for some people, they'll feel the full increase. And if their tax credit is going away, that help that they had before through the enhanced tax credit won't be there. So they'll be paying the rate increase and the difference from the tax credit. So it's like a double whammy.
So the enhanced credit really was designed to capture people who maybe make, a little bit more money than the other people who might qualify for the standard tax credit, if you want to call it that.
Yeah, so it makes it so that you don't pay more than 8.5% of your income, basically.
And I could give just one example. If you're looking at a family, a couple in their 60s, who live in Mankato, and they make $89,000 per year, that couple would no longer be eligible for tax credits in 2026. And so for their bronze plan, if they stayed in the bronze plan as they have right now, they would lose all access to the financial help that's helping them for that. And their premium alone, before they go to use that coverage, would be $24,000 next year. And that math was done before we had access to the rate increases. So I would assume that would be a bit more even than that $24,000 just to afford the premium of a bronze plan.
Hi, Erica Zerk from PR News. I had 2 clarifying questions. So for the individual market and for the small group market, are you saying that average for both markets is a 21% increase?
Individual is 21.5%, and then small group is 14.2%.
Okay, and then one other question.
Yeah.
So in the past, I reported that like the bipartisan reinsurance program, that with the legislative efforts to extend the program, premiums would have been 25% higher in 2026. Is it now? Did you say 70%?
I did, yeah, so we have 25% as that's been historical average, because, so the plans submit to us the information about what they would have been otherwise. So we go based on the assumptions that the plans would have made. The plans are assuming that they would have been 70% higher than that, and that we think is because of all the certainty and the uncertainty of just so many things going on in the market, and likely that there would have been many more coverage drops if there had been that much higher of it, like if the premiums hadn't been kept down. So we're doing our job here in Minnesota, and I think that's great. I think the 70% is an alarming number, but also makes me feel like we did a good job. But yeah, that's how we get to 70, not the 25, which was really opened all of our eyes.
Okay, so I'm reporting 70%. It would have been 70% higher in the state of Minnesota. That is correct. Okay, thank you so much.
Yeah, appreciate it.
Sorry to belabor this point, if I may ask one more question about the enhanced credits. When you talked about, Libby, about giving the Mankato example, if they don't extend these, is the distinction not only that the enhanced credits capture more people, but that, because it sounds like some people might get the basic, let's call it basic credit that's always been there to bring down ACA premiums, then also it was more affordable because of that enhanced one. Are you saying that some people only got that enhanced one and never got the others, and that's why their rate will be so astronomically high?
That's right. So before 2021, these enhanced tax credits were put in place. There was what we call the affordability cliff. And that was for folks who were 400% of the federal poverty line. That's a wonky thing to think about, but if you were 1 percentage point, $5 over that line, you were suddenly without any subsidy, without any financial help for affording your health insurance premium. So those folks before 2021 were paying full freight if they were covered. After those tax credits, those enhanced tax credits were put in place, more people than ever before have been able to afford health insurance. And so we've seen our uninsured rate in Minnesota drop over the last few years, I think in large part due to those tax credits. More people than ever before, more middle-class families can afford health insurance. And so that's where we're seeing that impact. If they go away, some folks are gonna have to make really, really tough decisions about whether or not they can afford that price increase.
To those seeing this at home, that might be just wondering where to start with the increases and the uncertainty that's out there right now, what do you want them to know?
So MNsure is going to be here no matter what to help folks figure out what their best option is. So we are encouraging every person who buys health insurance on their own to come to MNsure, shop, compare those plans. Don't just hit repeat on what you've done in the past years. You might find a better option for your family next year than it was this year. So, you know, I just want to make sure people don't get scared from coming to shop and look at their options. They might have an option that still works for them. We've got a network across the state of certified brokers who can help folks work through all of those options, figure out exactly what, they dig into those family details, figure out what their financial situation is, their health situation is, and help them figure out what is a plan that might work for them and their budget. But I will say, without Congress taking action to extend those tax credits, some families are going to be put in a pretty difficult position to decide what is the best option for them. So, Congress still has time to act. We hope they do very, very soon. If they don't, MNsure will be here to provide as much information and as much assistance as we can so that people know, what options are still available to them.
Can you talk about this, what kind of demand is on those brokers right now with the uncertainty, but also just like, do people need to be prepared for delays and just trying to get information?
So we do anticipate that our partners in the health insurance brokers will be very busy this year. So we would encourage folks to just give them a call early, reach out early so that you can get on their schedule. Because we do know they're gonna be fielding a lot of questions for people.
How soon can they start shopping or looking?
So MNsure will open our planned shopping in the middle of this month. So I think October 13th is the day that we are aiming for. Once October 13th comes, folks can go to MNsure.org and they can start shopping and comparing their options. So, anytime, if I would say anything, it's contact that broker now so you can get on their schedule. On October 13th, come to MNsure.org, start looking at what your options are. Go to that broker prepared with questions. And then, November 1st, we open our doors for enrollment.
Any other questions? All right, thank you all for being here, we really appreciate it. Do you have any questions on that?
No.
Okay, great. Thank you all for being here, I really appreciate it. Thanks.